So the growth rates are absolutely outrageously good, but the stock still got punished.
Yeah.
How come?
If they're not growing and they're not profitable, what are you supposed to like about it? Should we be concerned that the modern economy depends on the ad revenue of giant tech platforms? We'll talk about it next week.
Cliffhanger,
right?
baby.
Yeah, cliffhanger. Welcome to another episode of Growing E-commerce. Today, we're going to look at markets. We'll be talking about earnings from Google, Amazon, and Meta. Of course, the ads and commerce business. And we'll be talking about Shein's IPO, what we know about it so far.
Do they still earn money, Shein?
Did they ever? No. Let's get into it. Yeah.
Okay. Hello, Mike. By the way. My name is Chris. Yes.
Mike, you're Chris. Good.
Yeah. Well, I'm Chris. You're Mike. Let's roll.
All right. Good. We're not mixed up.
I'm tired today, Mike.
Yeah.
I think I need a Red Bull.
Let's not go down this road again. We know who we are, but does Meta know who they are? Do they know what their strategy is?
Yes.
Should I start with Meta? Or
yes, start with Meta.
Let's start with Meta.
You're not happy with the earnings call?
No. No one is. Who is
How
happy
come?
with it?
You own shares?
No,
No.
I don't.
Okay.
I don't. No, I'm not gonna. I don't have like a. I'm not shorting anyone, or I have no interest in this.
But the earnings call was not positive.
No.
Tell me why, from your perspective.
From my perspective, I mean, their revenue was up. It was up a lot. Their ad revenue, which is basically all of their revenue, right?
It's, I mean, we can do the math here. I think it's 99% or something like that.
It's 59.4 billion
out of 60
divided by 60.8, which I think is like 97%, something like that.
So they are, I would say they are somehow dependent on their ads business.
We've talked about in the past, Mark's disrespect for advertising. When
I don't want to talk with the ads guys. They're just unimportant.
Yeah.
So they are important, and the core business, I think this is the definition of core business, right? 98% of your overall revenue. Again, almost 30% year-over-year jump.
Yes.
It's. I mean, let's face it. This is absolutely amazing, especially if you compare the growth rates to Google's ads business. They are eating the lunch of the big G, especially in the fields of Google ads. Ads in general.
Yeah, digital marketing. We talked about that earlier this year.
Yes.
Meta's on track to overtake Google in terms of
and Google
revenue.
is salty about it, and I think they will do something about it. But okay, so the growth rates are absolutely outrageously good, but the stock still got punished.
Yeah.
How come?
Well, I think that's why I said, does Meta know who they are? You know, this goes back to when they renamed themselves Meta because they were going to be a metaverse company.
Yes.
It's like when you tattoo something on,
and then like
it's so embarrassing. Like your company's called Meta now, and it's not because you were drunk and on vacation.
They did it on purpose, and I think that the tattoo was right on
the forehead. Mike Tyson style face tattoo. But now they're not a metaverse company anymore. Now they're an AI company, right?
Yeah, of course. I think they're an ads business. I mean, you can't argue against it. A super successful ads business.
Yeah.
And by the way, shout out to. I mean, I think we also talked about this, and we see it on an everyday basis. Meta has really become the little, maybe even equally old brother to Google. Whenever someone is looking at a digital ads budget, Meta is right up there as a channel to look at, and they made this transition extremely well. I can remember when they had this first earnings call, years ago, where they I think the first time in the history they flatlined with new users. Man, they got punished as fuck.
Yes.
But they turned around by becoming this ads machine. And shout out to the big suck, man. This transformation, whether they did it on purpose or not, whether they gaslighted everyone else with the Meta thing, the ads business is doing extremely well.
Yeah.
It is what it is.
Yeah, it's just they're spending way too much of their money. I mean, honestly, they can still afford to do that more or less indefinitely, to be perfectly honest. But the question is, where's that headed? That's somewhere I really respect Apple for kind of stepping away from that stuff. But
I mean, let's face it, Mike. We had this discussion, right? I mean, when we talk about a bubble, the question is, I think that your argument that we are in the midst of a bubble, I think the strongest indication, or maybe a fact, is that the CapEx EBIT ratio has never been worse. Right, so it's actually crazy. EBITs are declining because CapEx is increasing way faster than the companies can grow.
Yeah.
Of course, yeah. I mean, talking about Meta, their CapEx grew 55% year over year.
55%.
Yeah, and they were already spending billions of dollars last. So
it's not like it was a small base or something. Yeah.
So I think fair play. This is something I think institutional investors get nervous about. What is the monetization strategy?
Yeah.
When I'm looking at Meta, like you said, they can do this for years, right? I mean, still the question: where's the return on invest on this AI CapEx? And I think Google, on the other hand, they also got punished because the CapEx are completely skyrocketing. But I see a way more straightforward monetization strategy with regards to AI on Google's side than Meta.
For sure.
Maybe we can touch base on that, because all the AI-based campaign types, they are creating revenue for them already.
Yeah, absolutely.
Quite convincingly. So, yeah.
Yeah, I mean, before we move on from Meta, I want to discuss one bear thesis that you and I were talking about before recording. Like, the question is, where does that 27% come from?
Yes.
And it's not really from new users.
No.
So
it's a very good point.
That's bad.
That's bad.
Because where it is coming from, impressions are up. And if users are not up, but impressions are up,
you know what that means for the Meta user, the average one.
Yeah,
right?
The ad load is increasing, the frequency is
increasing,
increasing,
yes.
Which is not necessarily a positive thing.
Not necessarily. I think especially for Meta, because Meta, I think, is still seen as my social media platform.
Yeah.
I think I'm not deliberately jumping on Meta to look for a product. That's what I do with Google.
Yeah.
Right. So if the original reason why I'm using Meta is eroding because it is becoming an ad platform, I think there's a risk that users will jump ship, and the question is, okay, where's the growth coming from? Because there's a limit of increasing your share of wallet with your given average Meta user before they are like, guys, hold on,
it's too much.
It's too much.
Yeah, and here, personalization is key to helping fight that. Like, I will say,
yes, that's true.
I haven't used Facebook in many years, but Instagram, I find that even though I'm not there to look for products, me personally, they know my interests really well. And the
better than anyone else.
Yeah, the targeting is usually pretty good, except for when Temu is just spamming things. But that's old news.
Temu breaks everything.
Yeah, but Temu's not doing that anymore. So,
by the way, one last thing, just for the listeners. I mean, by the way, the question is, what are you taking away as an online marketer?
Yeah.
Because Meta is not going bankrupt anytime soon.
Nah.
It's just maybe the biggest takeaway is, yes, the growth is coming from increasing basically the share of wallet with every average Meta user, which might lead to some friction on the consumer side.
Yeah.
CapEx, by the way, compared to growth, led to a net income drop by 14%.
Yikes.
They still had net incomes of almost 16 billion. So, but still, you see this trend line.
For sure. And the impressions are up, and also the ad unit costs are up as well.
Yes.
So
by the way, this is a takeaway.
Yeah. That's, it's getting
more
expensive, even though impressions are up. I think, that we can get into the reasons why, but let's move on. But I think on the user side, that's not great if if the ad load is too high. And on the advertiser side, if it starts getting expensive, it needs to work out.
For sure.
So
what we maybe can have a look at maybe one of the next episodes. I would really be interested, because I think there's a good segue to Google, because there we see what drives the ad revenue.
Yeah,
it's new powerful campaign types. What I would be interested in, what is the campaign type strategy on Meta's side, right? We talked about the stalling of
Advantage Plus.
Advantage Plus.
Yeah,
where's this new campaign type which drives growth?
Yeah,
maybe we can have a look at it.
Definitely. They have a model or like their own, they have their own AI for targeting, which I'm blanking on what it's called right now, but we can talk about that in
Yeah,
an episode.
maybe let's have a
That's
look at
where
it.
some of the gains have come from. But
I think a great segue to
yeah.
our beloved company, the Big G.
Mhm.
Yes. Let's state the obvious. Cloud is on fire.
Yes.
It is what it is.
And that will continue.
Cloud revenue accelerated by an insane 80% year over year. Yeah, I think they're doing fine with cloud.
Yeah, and that's a path, by the way, exactly for them to monetize their AI. It doesn't all have to get monetized through ads, but their search ad revenue is also up 17% to over 60 billion. So
Solid.
yeah,
Solid.
exactly.
But it's decelerated for the first time.
That's true. And how many quarters?
2-3 years, 6 or 8 quarters.
Yeah,
what I can remember.
That?
So
Okay.
for a long time, it's the slowest growth. Still 14%.
Yeah, I mean, there was an analyst on a call, and we're going to table this for next episode. But there was an analyst who was like 17%, considering how big Google is. Like, honestly, how is that possible anymore?
Yeah, but it's a fair question. The answer is what I liked about it, because they tied the still unfathomably strong growth rates for a company the size of Google. They tied it to one of the major streams CapEx is going into. Their new AI-based campaign types.
Yes.
First and foremost, AI Max.
Yeah.
Absolutely. Which is still, what was the quote? I think tens of billions of new search terms are...
It was billions of net new searches that weren't really monetized before. Yeah.
What does that mean, by the way, Mike? AI Max, when we talk about AI Max, what does it mean AI Max is monetizing search terms other campaign types weren't before? What does that mean, actually, on an operational level? How does AI Max does it?
Yeah. It's a super interesting question, and actually I want to table it because we only have so much time on this episode. We'll talk about it next week.
Cliffhanger,
right?
baby.
Yeah, cliffhanger.
But positive takeaway, one of the major new campaign types is driving growth for them.
Yes, and call to action, if you haven't subscribe so you can listen to the answer next week. We're going to come back to it.
All right. So,
but it's a big topic, so
let's
hold on to it.
Okay. Anything else noteworthy about the earnings of Google?
Yeah, I mean, YouTube ads strong, 13%. Yes. It's 11 billion alone.
Crazy shit.
And basically the Google network, like AdSense, AdMob, AdX, all this programmatic open web stuff, the display partners and so on as well. This is shrinking.
Yeah.
And
maybe on purpose.
Probably.
They just don't care.
Yeah, that's a long-term trend.
Yes.
So, considering it's down, I think about 1% year over year, but it hasn't been growing much. And as a share of the ads business, it's on a long-term downward trend. And
that true that. Again, by the way, underlying, I think Google has for me. By the way, CapEx crazy as well. I think they held on to the projection of roughly 200 billion CapEx for the fiscal year. 200 fucking billion.
Insane.
It's completely insane. By the way, the stock I think also got punished because of that. It's the fear. Yeah. However, I see with Google, I have a better understanding where the CapEx is going to.
Yeah.
It's the Gemini. It's and Gemini is everywhere.
Yeah, they had their identity crisis with Bard.
We talked about that.
Yeah, but that's it. This is now, think about it. This is a year into AI overviews, AI mode, and they're still up 17%. So again, that thesis, you can forget about it. Like, they have an identity, they have a path to monetizing this stuff. We'll see how all the AI economics work out long term, but out of compared to Meta, that's why Meta has an identity crisis in my opinion.
And massive CapEx.
Yeah.
So again, I have been bullish on Alphabet now for quite some time. I was the one, I think one of our first podcast episodes where we said, okay, let's see where Google is going, because there was no clear path. Now they have the path and they are executing the shit out of it.
Yes.
By the way, for me still, I think it was the last earnings call, this again, I think Sundar literally said again, Gemini is everywhere. I don't know, top of my mind, I think he said somewhat about 20 billion API tokens are processed per minute. Or something like so. Like, okay, they're spending 200 billion in CapEx, but it's going into the core of their business.
Yeah, exactly.
Which is fine. Yes.
But the crazy thing too is, Chris, like they said in the earnings call that like this kind of commodity AI, like the AI that's constantly serving in AI overviews and stuff, you might think that that's so expensive, but that's not even that. They said that with their TPUs and stuff, they're serving this at virtually no cost.
By the way, that move, so it's being able to create your own chip power, basically.
Yes. I don't want to get too off topic because I could go on about that.
Vertical integration at its finest.
Yes, yes, and I'm not optimistic towards anyone who's not Google in this regard, because TPUs are just so good. But to sum up, Google search revenues up, overall revenues up. They're not sending that much paid traffic to the open web. They're not sending that much any traffic to the open web, or in that, there are these organic problems with it, but they're just focused on their owned and operated properties and maximizing that.
And that's why although the CapEx are crazy, I'm super bullish on this company. But leave alone the stock price, because I mean, this is Fugazi. You actually don't know, because I think they had a massive beat, top and bottom line, compared to what the street expected, and the stock got still dumped. Forget that. I think they are investing in their core business, and the core business is a massive flywheel. That's what I see, and that's why I would be way more favorable of Google compared to Meta. Yeah.
Amen.
Amen.
I agree.
A word with A is maybe another
Amazon. Amazon. Man, I thought I was good with the segues.
Yeah, man.
That was some smooth.
I'm learning from the best. All right. So Amazon.
Amazon also up a whopping 26%, reaching 19.8. Let's just call it 20 billion in advertising. Yeah,
I love all the billions flying around.
I know. We're going to talk about billions going in the other way soon, though, with Shein. So hold on to your butts.
You know what? Amazon, I think they did well. They are not going to go bankrupt.
No, they're fine. Sponsored products are the largest ad offering, doing really good here.
By the way, this is what I loved most about their earnings call. The ads business, it's going strong.
Yeah, absolutely. Ads business is strong. I mean, they're strong just about everywhere. But
of course, Amazon. I think we can leave it right there. They're not going bankrupt.
No. Should we
talk about Shein?
Okay, all right. In the interest of time,
shouldn't be a segue, by the way. Going bankrupt, Shein. I'm not saying that.
Bankrupt Shein. No, no. But Shein released a prospectus for their IPO. They released a bunch of documents. As they inch closer to an IPO, question is, should it happen? From my perspective, what's your reaction?
Look, I think we had our fair share in the media landscape talking about Shein, talking about how their ads business is doing in general. What I see with Shein is a I don't know if I'm would call it death spiral, but if you look into the whole idea of this stock company, it was all about growth.
Yeah.
As far as, like, again, there may be other institutional investors which see it as a completely different company. For me, it was this massive growth story, a strong enough business model to have a sustainable, strong growth rate. And everything, it feels like everything crumbled with this. No, really, with this seemingly, I don't know, not even that big of a thing, but the de minimis act. I mean, I think
the de minimis, for sure.
it crumbled their business model, and they are now in a very, very tough space because they can't grow anymore at rates which is sustainable.
Yeah.
And that, I don't know, minutes before going public, it's really a bad place to be in.
Yeah, 100%. And I mean, I've been criticizing that dependence on de minimis for a long time, and I'm a little resentful because there are people who are always like, "Don't you think they know that? Like, they know that, and they're building, they're transitioning, they're doing more local, they're bringing in local sellers, they're doing all kinds of stuff."
Of course.
And yeah, they did make investments there, but actually, no, they were still completely 100% basically dependent on
absolutely, and
this loophole.
For sure. At least it seems like that, because and you never know what's going on behind the curtain, right? I think what Shein, as big as they are and as big as China is, what I think what they underestimated is, and shout out to the EU, how serious they were about this, and how forcefully they really acted on it. I think it's a good move. We talked about how openly we invited these Chinese giants to eat our lunch. I think it's the right move.
Yes.
I think it's good on all levels. And by the way, I posted on LinkedIn, I think you too, of course Shein will find a way.
I don't think that the company has been around for a long time.
Of course, and they have smart people there. The question is, do they find a way to accelerate their growth again at certain profitability levels? Because this was and if you're crawling around at an EBIT margin of 1%, and you're compared to big other, Inditex Group and so forth, which are crossing 20% EBIT margin and still growing.
Yes.
I don't know. Why should I invest in you?
No, if there's like the growth story at this point, they are not precluded from the US market or the EU, but they're severely limited in these markets compared to the past. The growth story has just evaporated. They're not profitable. So which is it? If they're not growing and they're not profitable, what are you supposed to like about it? And
I just over the weekend I met a good friend working for quite some successful company, Nasdaq listed, and they are operating on a rule of 50. And this is basically every investor knows, if I invest in this company, there's a rule of 50, which is the combination of growth, CAGR, compound annual growth rate, and EBIT margin adds up to 50. So if I'm not growing, I'm better, highly profitable. If I'm super strongly growing with no EBIT margin, fair enough. But and this is where I see the crisis with Shein right now. Tough space to be in,
for sure. It also it revealed their total dependence on advertising as well. Just spending last year $6 billion in total marketing costs in 2025, which is a lot. And the company, of their total marketing, they were like 95% of it was ad spend, and that shifted a bit recently. But
and it seems like, right, whenever they loosen or decrease the ads pressure, there's no way they can compensate with organic traffic, right?
No, and this was like, I think that they have had a clear value proposition. The amount of selection was mind-boggling. The prices were rock bottom, but it wasn't enough. It still wasn't enough. They needed the ads at a massive scale to do what they were doing.
And that's the thing which surprises me, because honestly, I've never bought there. I will never buy there for reasons no one is interested in. But whoever bought there had quite a good experience.
Yeah.
So I'm wondering, like, this ads pressure, that there's no this return rate of customers, because I think the core product is not bad.
No.
You can talk about, I think that there are cleaner businesses, but the core product, like you said, is good.
Compared to Temu, for example, I can.
Sure.
The user experience and everything of Shein makes a lot more sense to me.
Absolutely.
You can imagine recommending Shein to a friend. You can imagine this kind of viral word of mouth coefficient or whatever, but not enough. And customer acquisition costs basically tripled, at least if you look at the top line level numbers.
Crazy.
Yeah.
Let's see. Quite interesting. Any news on the IPO now? I think it got delayed now, right? Or
I'd have to double check.
okay,
Yeah, I think
okay.
so. But
Let's see. I'm really curious about that one.
yeah. But I think that wraps us up for Q2
Man,
earnings, right?
earnings calls are always fun.
Yes, I like them.
A lot of billions to discuss about.
So-
But as long I think as long as Google and Meta are growing double digits, I think the world is fine. I think we should get worried when they are all growing only 9%.
yeah.
Shit is about to hit the fan.
Yeah. Should we be concerned that the modern economy depends on the ad revenue of giant tech platforms? Maybe. I don't know.
Should be up for a discussion. Yeah. Thank you, sir.
Thank you, Chris. Thanks, everyone, for listening. This has been another episode of Growing E-commerce, brought to you, as always, by Smarter E-commerce. You can learn more at smarter-ecommerce.com. And once again, if you leave us a review, a comment, shout out on LinkedIn, whatever, we really appreciate it. Thanks, and we'll see you next time.